How does one lose money in the stock market? That is what we are talking about today. Because if you know why people are losing money in the stock market, you can do the opposite and make money in the stock market. I am Tiffany Thomas, a financially free millionaire. If you're looking to become one of those, make sure and hit that like button and hit the subscribe button, and we are going to dive right in. I want to share 7 different reasons with you on why people lose money in the stock market. Reason number 1 is because they have a lack of knowledge. They just don't know how to invest in the stock market. They've tried doing some research, they've listened to some podcast interviews, or maybe read some financial blogs or articles, but they just don't fully comprehend how the stock market really works. There are a lot of different investments out there, and there are different types of investment accounts and different brokerage companies that they can go with. So they just don't understand all of that and how it all works together. By not understanding that, then they are losing money in the stock market. Reason number 2 that someone loses money in the stock market is because they are trying to get rich quick. They want to put their money in and take it right back out. So they get a hot tip on a company that is lower in price right now, and they think it's going to come back up really quickly. So they put a ton of money in that company's stock, and they end up selling that investment and putting it in something else that probably does the same thing. So they lose money because they are so focused on getting rich quick instead of getting rich over the long term. They are just not being patient with their investment. And I can see where that comes from because our world is so filled with instant gratification and getting things delivered to you overnight. So they want to become that overnight millionaire. But that is not the best way to make money in the stock market. And there has been studies done that show that 80% of people lose money in the stock market. So that is pretty high. And part of that reason is because they are trying to get rich quick. And then reason number 3 that people lose money in the stock market is because they have a lack of discipline. They haven't trained themselves to make investments every so often, or they may just be scared to take the action. So if they've taken a little bit of action, but they don't have that discipline in place, then they don't want to take more action because they are afraid. And with that lack of discipline, that means that they don't have an investing plan set up. So even if their discipline isn't the best, they still don't have a plan in place to invest in the stock market. So it isn't getting done. So they are losing out. One way to avoid this is to have automatic investments. And I actually just did a training about this recently in my free Facebook group. It's called Investors to 7 Figures. I will leave a link in the description. So make sure and click on that and join my free Facebook group, and you can learn about how to automate your stock market investing so that you don't actually lose money in the stock market. And then reason number 4 someone loses money by investing in the stock market is that they are asking the wrong people for advice. They are going to their uncle who is pretty much broke and asking him, how do I invest in the stock market? Or they might be asking the kid that got rich overnight. He happened to get lucky once, but he is not able to repeat that success. They don't have someone that is guiding them on how to invest in the stock market that has done it successfully and done it successfully over the long term. And then the 5th way that one loses money investing in the stock market is that they complicate their investments. They have so many different investments that it is so complicated. They don't know when to sell certain ones or when to add more to another investment. So they are just confusing themselves by complicating it and not getting the returns that they could. And there has been studies done that show a simpler investment actually gets higher returns than a complicated investment. And taking a look at this article, it shows that just under 35% of stocks outperform the market over rolling 5-year periods. But that percentage drops as the time horizon extends. Only under 29% of firms or companies beat the market over 10-year periods, while only 1 out of 5 stocks survive and outperform the market over the following 20 years. So it is really risky to invest in individual stocks, and if you have a whole bunch of individual stocks, You might be thinking, oh, well, that's less risky. But actually, the study shows that it is not that great to invest in individual stocks. It's not outperforming the entire market. It shows that a very small percentage of stocks will outperform the entire market. And then the sixth reason someone loses money in the stock market is because they are not taking the emotion out of investing. The stock market is based on two main things, fear and greed. And if you are investing with those two emotions, you are not going to be successful. When the majority of people are fearful, we want to be the opposite. And when the majority is greedy, we want to do the opposite. So we really don't want to be basing our investments on emotions. And this even goes with if we really love a certain company, maybe we buy a ton of their products, and so we decide to invest a ton of money in their stock. But really, we haven't considered everything else about that company. So the investment is purely based on emotion, which is a quick way to lose money in the stock market. Comment below and tell me if you have succumbed to any of these reasons that people lose money in the stock market. I know I have done it before, so I'm curious to know if you have or not. But we can all learn from one another and learn from each other's mistakes instead of making the mistakes on our own. And then reason number 7 is that people ignore fees associated with investing in the stock market. They don't even realize that they are paying fees a lot of the time. When they are investing in different funds, that fund has an expense ratio with it, so they are paying a certain percentage to invest in that fund, and that fee can add up to a lot of money over the years. And plus, if people are paying a financial advisor to invest their money for them, then they are definitely paying the advisor, and they may be paying extra money for the investments that their advisor is recommending. In this article from Forbes, it says, let's assume we pay an advisor 1% of our investments for their services. That's a standard fee in the industry, although you can find less expensive and more expensive advisors. The result is that on an after-fee basis, our returns drop from 9.7% to 8.7%. Which may not sound like that much, but the result is a portfolio of just $4.3 million. The 1% fee costs us about $1.5 million, or 25% of our wealth. I can think of a lot of things to do with $1.5 million, and it is not paying someone else to manage my money for me. And also, that example doesn't include if there is an extra fee associated with certain funds that we are investing in with that financial advisor. So if our advisor invested our money in mutual funds that also charge a 1% expense ratio, then our wealth would fall further, and it would be down to about $3.2 million. So again, it can cost us millions of dollars in fees that we may not even realize. And paying someone else to actively manage your funds is not going to give you better results. High fees do not guarantee higher returns. It's usually quite the contrary. There have been a lot of studies done about this. And if you are wondering how much you are really paying in fees, I like using a free app. It's called Personal Capital. They have a fee analyzer in there, which is really fun to play with. So you can see exactly how much money you are losing out on by paying a certain percentage in fees. If that is something you are interested in, I will leave my referral link below in the description, and you can click on that to set up a free Personal Capital account. Comment below and tell me which of these was your favorite reason on why people lose money in the stock market. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified when I post new videos. And if you want to see even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.